Well, g'day there, traders and friends. Thanks for joining me on this Tuesday afternoon market recap. This is going to be a continuation of from the pre-market update I left you with earlier today. We saw the markets gap collectively to the downside. However, we have seen once again buyers show back on up and drive the prices more or less to where they began to open. We saw during the session, again, intraday push to the downside. However, it simply couldn't hold. This is the third consecutive hammer type of candlestick on the Dow Jones Industrial Average that we have printed in the last 3 sessions. This is telling me that although the market is a little bit weak, although it is a little bit shaky, and this is largely driven by the headlines, there is still, of course, a willingness of active market participants to come on back in and to actually position themselves off from the lows, or at least off from the lows of the intraday pushes. You can see here that even on the Dow Jones Industrial Average, we tried to push on down and actually move back towards this past most recent higher low. This is the third consecutive higher low that we have set up in the past 2 months. However, once again, the bears couldn't sustain the move and the market actually reversed. Towards the end of the session today, we actually saw a relatively strong push back on up to where more or less we tried to begin the session. So this is very positive. Although the net movement was down 287 points, I can say definitively that as at the close on Tuesday 1, we're still above, all right, the rising bullish trend line, which is positive. And we are also on top of that above the most recent swing low. So technically speaking, from a technical analyst perspective, as a swing trader, this is another buy the dip opportunity. And this wasn't that of a bearish trade setup. I was just, or during this session or earlier today anyway, I was just showing you where the market was going to open. I'm going to delete this. And now what we can do is really easily bring down this bullish continuation signal. So I've just moved it from where it was down to roughly 25,127. Again, we need to pay attention to the construction of candlesticks that do continue to develop during this week. We'll see obviously how Wednesday operates. And what we may see, in fact, is out of a white candlestick or even a positive sort of move pushing off from the lows that we've established today. And we could see this market very easily not only close this open gap, but push above it. And if you are to see that, and this may show up in the form of a one white soldier, who knows, we could see another gap to the downside, and it may show up with an engulfing pattern. That is going to be technically the 2-day reversal signal, very similar to this 2-day reversal candlestick that I've spoken about in the past. Very similar to these two candlesticks with the long lower wicks at X marks the spot, where we can say definitively, well, this is a really nice entry point. This is the trend continuation, and it makes a lot of sense from a risk and reward standpoint as well. So again, this is a work in progress. Here I am, I'm updating you on the candlestick itself as at what happened today. And I can say with confidence that we do have another hammer candlestick. This is the third consecutive hammer candlestick, telling us that there is still market participants buying on this pullback, which is very good to see. So if we can sort of weather the storm, move beyond the current headlines and see this market holding up above roughly 24.3, 24.375, it's going to be very advantageous if you can position yourself for that upcoming or that next push to the upside. So we're going to monitor this. I am going to walk you through the S&P 500 as well. You can see we pulled on back down, but you can see immediately that the candlestick is different. It is not that of a hammer candlestick. This is what we call almost a bullish sort of counter attack. All right, we've gapped down. If I can zoom in on the detail, we didn't pierce into the previous candlestick, this being Monday, but we did more or less close today being Tuesday where we were on Monday. This is a very bullish candlestick. It's essentially pulling the handbrake on the bearish move, and it's showing up right at this green rectangular box. Now, relatively speaking, the Dow Jones Industrial Average is further down, or at least it has retraced a little bit further in percentage terms than that of the S&P 500. But you can see also if I bring up these exponential moving averages, surprise, surprise, we are holding off from that rising 20 exponential moving average. And again, we do have a very little lower wick, not as pronounced as that on the Dow, but it is showing us that there are buyers once again in this green rectangular box. We're above the bullish trend line, and this is making a lot of sense because over the weekend we spoke about the levels or the steps of the market, this being past resistance, acting as new support, and that's exactly what is playing out right now on the S&P 500. I don't want to bring this down too tightly at the moment. I want to allow another at least one session of trade before I do definitively move that bullish trigger, but at the moment, the market did hold up relatively well. We only closed down 11 points on the S&P 500 after that pretty impressive gap to the downside. So you can see and just tell by the white candlestick that it was, relatively speaking, all things considered, that of a relatively sort of neutral but albeit positive day after the original gap to the downside. So I'm really liking the construction, or at least the candlestick construction, on the S&P 500 as well. Now, if I move to the NASDAQ, very similar to that of the S&P 500. Different to the Dow, although yes, different to the S&P, but we did pierce into the candle of yesterday being Monday. Another bullish continuation signal. This is the fourth consecutive. So unlike the Dow Jones Industrial Average, where we have 3 consecutive hammer candlesticks moving into a support area, which are all technically bullish, we've got 4 consecutive white candlesticks, which are looking like a bull flag continuation. And if I go through some of these tech companies as well, you're going to see that the majority of these held up relatively well. We've got Amazon, which has actually pushed on up to a new all-time high today. It was up $11. We have also, let me just bring it up, Netflix here that did definitively hit the target at $3.99. Okay, so it's interesting how some of these individual companies work in conjunction with the markets. You can see here we closed up $14.58, but the good news is that we have tagged and touched and tested, and we've hit our target at $3.99.29, and it's come on the most of sort of least expected days when you see the markets collectively gapping down so weak, or at least so strongly to the downside, to see these whites long day Morobozu show up on a number of different candlesticks. Interestingly enough also, we've seen that of a one black crow set up on Tesla. This is a reversal candlestick to the downside. This is showing up right at this logical area of resistance. If I can zoom out and show you this on the weekly, you can see just here, it's not the actual one black crow on the weekly candlestick, but this is showing us it's at a pivot at 360 that we've already referenced, and why I've sort of been more or less staying away from this, not because of the breakout here, but more so where we have been with the location, so to speak, at 360. So that's relatively interesting as well. But really the reason for this Tuesday afternoon market recap was once again just to add to the analysis, really the warning that I gave you before the market opened as to what the futures were doing. Now, if I go through this list also, we've got Apple, and you're going to notice this with a lot of individual companies. They're pulling back into these green areas of support. And generally when we see these sort of processes, or at least price action, do this, it is very favorable. That's why we highlight them and make them green, because there is opportunity if you can sort of not get caught up, so to speak, into the hysteria, all right, of what market participants, or at least analysts, are writing about the current state of the market, because this is where you really should be thinking about positioning yourself for that next impending bullish move. And as you can see, we've broken above and into a recent all-time high, and this is essentially at the current juncture that of a 1, 2, 3 backtest continuation. So we're going to have to monitor this, pay attention to it, see what candlesticks show up on Wednesday and also on Thursday. But it does look like a bullish continuation sort of signal, which may set up on Apple in that green rectangular box. So I've recapped Amazon. We've got Boeing Airlines, which hasn't held up all that well. Good news though, however, we hit that target at 369. Most people liquidated all of those positions. There are a handful of emails that I have received with people holding on to some. We saw it get clobbered today, down $13.60, but we're just going to have to monitor this at the moment. We're in no man's land between support and resistance, so we can't really do all that much on Boeing Airlines. And if you had a stop below this area here, you should be stopped out of that on Boeing Airlines as at the close on Tuesday. Baidu again pulling back on down with the market. You can see we've got another hammer candlestick, and it's working once again, sitting right on that rising 20 exponential moving average. Not to mention that this pattern itself is looking like that of an ascending sort of triangle. So again, we've got our defines, or at least the structures, written, or at least illustrated on my chart right here. As long as we remain within this triangle, much like the market keeping above that bullish trend line, everything is A-OK, and we should see over time Baidu continue to move and ultimately break out above what has been most recently its all-time high in the month of May 2018. So we're just going to have to again monitor along with that. We saw Caterpillar move to the downside, another $5.38 today. It does look as though we are going to come on back down and retest this purple support area box. And on top of that, we're getting closer to a macro bullish trend line as well. So again, we're just moving in these little sort of correctional movements along with the market as I think we price in that next higher low. Now, continuing on, we've got COP still holding within Friday's candlestick, not really going anywhere. More or less got stopped out very close up the top here at $69 per share. This was a very quick trade above $66.97. We're more or less back unchanged at the moment, slightly below $66.97 again. So we just need to allow this a little bit of time to rest at this support area. If we do see white candlesticks down here, it's going to be a very similar trade to the one we had in the month of May, and also the very quick trade that we were entered into at the end of May again, but closed out earlier in the month of June. So we're going to monitor this too. Not a whole lot we can do at the moment. More or less, you need to sit on your hands. You've got CVX, which was relatively unchanged today. We're still holding up around 125.86. You can see we were down 43 cents, but largely we didn't go anywhere. And what you're going to see on this stock is that if we continue to move sideways like we have been doing for the past 3 weeks, we are going to get into that of a Bollinger Band squeeze. If I can bring this up on my chart, you can see just here that the top band is pushing to the downside and this bottom band has only just started turning up. So we might actually move into a squeeze. It is going to be a squeeze in about a week's time if we continue to see price action more or less being flat and uneventful. So we're going to keep an eye on that. Google today had a little bit of an inside day candlestick. However, it is a white candlestick. We were down $4.89. However, we are getting closer and closer and closer to this 1189 target. All right, this is from the breakout at 1151. So all things considered, I am relatively happy about the price action on Google. Considering today's session, or at least today's trading activity with that relatively large gap to the downside, this is looking as though it is going to hit this target probably tomorrow and Wednesday, if not by Friday, this close of week. And that's going to be another trade which we'll be quite happy about. At the moment, I'd just simply be holding it because we haven't moved back down below 1151, which is the low of actually yesterday's candle as well. We've got IBM pulling back down once again into this green rectangular box. This is exciting to me. I love these types of trades. Think of JD, by the way, when you're looking at IBM at the moment. What we're seeing is a bunch of exhaustion in terms of the selling pressure, and it's looking as though the trend is shifting. All right, very important for you to understand this. It looks as though the trend is shifting. We've got a series of higher lows, and we've got white candlesticks very close to this green rectangular box. And if we see this market continue, we should see IBM find a bid, and this thing could go parabolic over the coming weeks. Okay, I don't want to tell you definitively that it is, but I'm looking at this with great interest, great significance, and I'm expecting this more or less within or by the end of July to be back up here at about 150 at a minimum. Who knows, it could be up as high as 156.60. We're going to monitor this, and also we're going to have to monitor the candlesticks that show up on Wednesday and also Thursday this week to see if we do see any real traction and support around this green rectangular box on my screen. I've recapped Netflix as well, and I have also recapped Tesla. Now, earlier today, I recapped that of gold, and I said, hey, pay attention to GLD and see if it catches a bid anyway, with this sort of short-term chaos, so to speak, in the market. And that, we really didn't see that, did we? We're down another 28 cents. It's looking as though I've got a croaky voice at the moment. My apologies if it's starting to break up in this recording, but you can see it looks as though we're trending down to 120. And it's a little bit of a surprise to see gold not actually rally with a little bit of this market turmoil. So again, I'm still holding this GLD position. I think we're towards the end of an exhaustion type of selling move. Time will tell, but really the line in the sand is 120 for me. If we start cracking this, definitively I'm out of the trade immediately, and I'll reconsider the actual structure of this moving forward. But at the moment, I do think we are towards the end of the selling pressure. I am looking for white candlesticks that are going to suggest a reversal showing up on GLD and also SLV. And don't forget, of course, that analysis we went through with that weekly Bollinger Band squeeze on SLV and the odds and the likelihood of that actually breaking to the upside very, very soon. It's something I haven't seen in a number of years, and it is quite exciting for those who can recognize, of course, that Bollinger Band squeeze on the weekly chart, and to see that sort of long-term consolidation that has been underway, and it's leading us to the apex, which is really where we currently find ourselves on commodities at the moment. And generally, with commodities as lowly priced as what they are, I can only really think that they are going to break to the upside in conjunction with the US dollar, ultimately fizzling, all right, and failing from the current area. Now, today we saw a little bit of a bid in the dollar. It did close up. It was up 30 cents on the US dollar index, but at the same time, we're not actually being able to hold above this candlestick, nor this candlestick or this candlestick over here. So there is still a resistance area. We did push on up above it intraday today, but at the same time, we haven't definitively broken above this area. So focusing very closely on the US dollar as well, and obviously what that means for GLD and SLV. I'm going to give it a few more days, and as I said, I've got that stop place below that rising bullish trend line and also horizontal support on GLD, and I'm happy more or less just to currently leave it how it is. All right, so that's going to do us as at this Tuesday afternoon market recap. I'll be back with you later in the week for another market address, but pay attention to what happens around these current levels. We closed at 24.7 on the Dow Jones Industrial Average, and we'll take it from there as we see more data stream to us and give us end of day data, as at Wednesday, the close of Wednesday. I think there is a very good chance that we are going to see a reversal, and it's going to be an opportunity for you to once again position yourselves off from simply that most recent higher low before we see higher prices moving forward. All right, all the best, everyone. It's James signing off on behalf of Pivot Point Trading. Farewell.